the early negotiation of the term sheet, can be a difficult period, but if everybody's reasonable, there's no lasting impact from that. And once the VCs are on board, they ought to be 100% behind helping the company be successful. I'd encourage the entrepreneurs to reach out to CEOs that have worked with these other VCs to find out if they are company friendly and adding value to their boards. So that diligence aspect is important. At the end of the day, the VCs can help a lot because they have a network of potential management team members, consultants, the various support groups around the company, like the lawyers and the accountants, and hopefully they have the experience of helping bring early stage companies through all the way to market and ultimately to exit. A good VC also has strategic relationships with all of the business development folks at large acquirers, and often those relationships go all the way to the CEO level, which can be very helpful when you're negotiating the sale of the company. So I think one of the areas that VCs can be most helpful is in raising subsequent rounds. The VCs all have a network of other venture capitalists that they've worked with as syndicate partners where they can make introductions. They can also steer you away from venture capitalists that really don't have money to invest in companies at this stage, or maybe venture capitalists or angels or corporate investors that haven't been helpful in their prior experience. So they can be a good mentor and a coach for the entrepreneur as they're going through the fundraising rounds. Everyone on the team has a role to play. The founder, the CEO, the management team, and the employees, as well as the board, all play very different roles. The board ought to not be there to micromanage, and in my experience, most VCs don't want to run the company, or that's what they would be doing versus managing a portfolio of venture capital. So, everyone has their role to play, and I would encourage the entrepreneurs to use board meetings as an opportunity to focus their teams on achieving major milestones and reporting those to the board in an open and honest fashion. That will build a lot of trust with the board and allow the board to get out of the role of micromanaging and instead focus on future strategy. I encourage an open, honest relationship between the VCs and the entrepreneurs. Every company that I've been involved with has had their Waterloo moment where we weren't sure the company was going to succeed. Companies like Perclose, Acclarent, EPI, Ardian, all had their moment when we weren't sure that either the technology was going to work, or that we were going to achieve clinical trial success, or that we were going to achieve our commercial ramp. So that aspect is not foreign to venture capitalists. They expect companies will miss milestones. They expect companies will have their challenges along the way. If you have an open, honest, trusting relationship where the information is shared and there are no surprises, the board members hear about the issues as they come up, then that will be reciprocated and everybody can help work to solve the problems.